Good afternoon, everyone. It's episode 21 of the Safello show. It's lunchtime. We will be talking to Jesper from Northstake. But first, let's have a look at Matt. It's always great to have Matt wave at the audience. How are you doing, Matt?
Sorry for the delay. I'm doing really good. It's been an exciting night last night, but dealing with that pretty good.
You guys went to the Swedish-Poland game yesterday.
We were there at the stadium supporting.
You were in the Swedish side of the
Yeah, I was on the Swedish side, but I was supporting both.
Okay, nice. You got the two flags. All right. Thanks, Matt.
Yes.
And then we'll do some ads for the best company sponsor, Safello. If you go to safello.com, you can find all the information about our company. You have the QR code to quickly download it from the App Store or the Google Play Store. You can find the prices on our landing page. And then if you scroll all the way down, you can find our social channels, particularly Discord. I think we just hit 1,000 members there. So yay, woohoo. I think then we can change what we can do with Discord. So that's great. Thanks for everybody for engaging there, who have found their way to the Discord channel. It's also integrated via the mobile app. If you're in the mobile app, there's just a link to it so you can easily get there. We've done another release. I think we just introduced the dark mode into the app for those who like to buy their crypto or sell their crypto at night and wear your sunglasses at night. For other interesting things regarding, for instance, the stock, you can go to the investor page. So you click /investors. There's the Swedish version of that as well. And then you can find everything about our company that is listed on Nasdaq First North. As we're speaking now, the stock is up 8.42%. Great. So here you will find all the information. We just released our annual report that you can find under financial reports. If you can click there you find the latest annual report. That's it. I think with that we can bring our guest to the stream. Jesper, welcome.
Hey, thank you. Hey, Frank. I'm well. How are you? Good to be here. Good to see you.
Likewise.
And hello to everybody.
Yes, you're in Copenhagen?
I am in Copenhagen, yes, that's correct. We are a Copenhagen-based company, Aarhus-based as well, but yeah, good stuff.
Where did you say? Where? Aarhus? Oh yeah, okay.
Aarhus, so yes.
That's where the hardcore developers are, right?
Exactly.
All the people who do the hard work in Aarhus and then the commercial side in Copenhagen.
Exactly, but there's a big blockchain developer community in Aarhus, so that's That's amazing. That's the place to be.
Tell us about the blockchain community in Aarhus. What does it look like? How big is it? Which companies are there?
Yeah, I mean, you have, that's a long story actually, but it's a really interesting one. So Aarhus University actually have a very strong track record and pedigree within cryptography and blockchain. So one of the founding fathers, so to speak, of blockchain almost, Erik Damgaard, is actually he's the Damgaard in Merkle Damgaard, which is the hashing function that hash all blockchains together. So he's out of Aarhus. You also have Torben Pryds Pedersen, who pioneered zero knowledge proofs. So I mean, stable, technological innovations that comprise blockchains today. So I mean. And that's Aarhus based. There's a big community there around blockchain and cryptography. Yeah.
The more you know. And you guys did you start out of that area or out of Copenhagen?
So Northstake was conceived and founded in Copenhagen, but we quickly identified people who joined the Northstake organization who are Aarhus based. So we have 2-3 people there. Now responsible for developing our platform. Yeah.
Awesome. Maybe we can get the website up and then you can maybe tell us a little bit more about Northstake.
Sure. So Yeah, fantastic. So we're the leading Nordic staking partner. I mean, perhaps a bit easy to claim because I think
You're the only one.
we're the only one and the biggest one. But I mean, staking is just so exciting because it's up and coming for really hardcore crypto people. It's been around for years, but I think we're seeing a development in staking that we can sort of come back to. Northstake in particular is actually a registered and licensed virtual asset service provider in Denmark.
Mm-hmm.
Also, we are pursuing an ISAE 3402 SOC 1 certification, which is information security, and all of these things contribute. Yeah, and obviously we are AML and KYC compliant. And all of these things just, sort of builds on this, I think, ethos around institutional crypto or mass adoption of crypto. We're just seeing the start of it. And that also means that companies, funds, institutional professional investors, they are requiring sort of, higher quality in the services delivered to them. It's not only about connecting your wallet and earning passive income anymore. It's about billions of US dollars in assets that needs to be managed in a secure way, and staking is very much the foundation for the value generation from crypto asset, I would say. So yeah, let me pause there because I'm sure you.
well, last week we had Chen from Tesseract, and they're doing yield farming also on an institutional basis, and this is staking. So I think it's good for the audience to take a one step back and just dive into maybe the difference, not necessarily between the companies, but the notion of, okay, what is staking? Most people that have been following crypto, they're probably aware of like Ethereum that is now moving to proof of stake. But then there's this whole world of other protocols that, fingers crossed for the merge. What is it, June? So, I mean, there's been preparations for it. Not priced in, probably. That's my best. But, we'll see. No investment advice, as always. But, yeah, maybe just walk through like that landscape and then also maybe from whatever yield farming is in your perspective versus staking and direct staking versus like relying on third parties to do so for you.
Yeah, great question. Thank you for that. And let me see if I can share a couple of perspectives here. So I was talking to our CEO, Jesper. He's also named Jesper, by the way.
Oh,
and
that's great. The gang of Jespers.
Exactly. The gang of
well,
Jespers.
My best friend in the Netherlands is called. My oldest friend is called Jesper as well. It's a great name.
Fantastic. Thank you so much. Now we were discussing, right? So what is staking? What is analogous to staking, or how can we sort of compare it to something that we know? And I think the best analogy that we can come up with is that staking is in many ways, what you would consider in traditional finance to be fixed income, right? And then yield farming or liquidity mining or whatever you want to call it is everything that you can build on top and sort of those, more risky type products, right? And I think it's interesting if you look at adoption of blockchain and crypto, that people who were early into crypto blockchain, I mean, all the way back to 2013, yeah. and beyond. I bought my first Bitcoin, I think, in late 2016. So I'm a latecomer to this, right? But
great timing though. Perfect timing. I was just sitting there in the bear market, like wasting my time.
But what I think is really fascinating is that these the people who moved early into this space, right? They saw the big picture, right? And these are people who tend to think about, all right, what is the next big thing in terms of blockchain crypto? And that also means that we tend to focus on NFTs, yield farming, liquidity mining, a lot of different concepts, which are sort of conceptually maybe difficult to grasp. And we still need to see proof points on them. I would say, yes, there are, great yields to be harvested if you can get out of the positions again. But staking,
and if there's no wormhole to be exploited,
those things as well. Where I think staking is is proven by now, right? It's stable. We understand that
Right.
if we look at, let's say, top 10 proof of stake assets, you can stake them. There's hardly any risk if it's non-custodial, or you do it with a cold wallet, and that just compounds on itself, right? It sits there. It just earns you passive income, and in many ways, to be honest, for early adopters, a bit boring, right? It's just yield, and it's only 10-15%.
Our slogan is boring is good, so that works. But I mean, I think you're right. Like, so we have these like, we see Safello always as a filter for people, as the safety net for the users that we interact with, so they don't get exposed to scams and hacks and too esoteric stuff. Of course, they can still do that. They can take their crypto off the exchange and do whatever. But this is a great example where it's like, okay, you have buying and you have certain crypto assets, and you're right. I think that staking has gotten to this maturity level where it's like, okay, that is a component that one should add. Not saying about our roadmap per se, but of course it makes sense. That has a level of maturity that anyone would be interested in it, and I guess in your case that also means that institutions, it has reached the level of an institutional checkmark, like we can engage to a certain degree, or
yeah, exactly. Because I think when you look at asset managers or portfolio managers or crypto funds, I mean, they understand how to make money in this space by trading their volume, trading their holdings, right? And they are starting to realize that they've only been exposed, so to speak, to one way of one side of the coin, essentially. The other side is that you can also generate yields, and that's an interesting perspective. Let's say you hold 1,000, 2,000, 3,000, 5,000 ETH, for instance, and you need X amount to post collateral, make your trading, utilize or optimize your opportunities in the space. But then the bottom 20% could actually be staked. It will never leave. It will never leave your account anyway. It just sits there, right? Then understand, liquidity mining or liquidity staking and all these kind of things with regards to ETH in particular. However, if you're in it for the long term, let's say the bottom 20% of your portfolio that just sits there, you should consider staking that, because you would be worse off not doing it, right? And if it's a long-term holding, which you would in most cases be, then you don't relinquish anything other than you're just making sure that your asset is sweating as much as possible.
And maybe you can technically dissect that a little bit to bring it even more down. Like, so what is the process of staking, and what is that versus liquidity staking? And so, but just to really boil it down to the very basics of what it means to stake.
Great. So proof of stake blockchains, the consensus algorithm needs tokens, crypto to be locked in staking protocols in order for the network to function properly, i.e. ensuring that there's consensus in the network. Token holders who do that is rewarded with a staking reward, and this is how you create the yield. Now, for, let's say, Ethereum, let's take that as a good example. Fingers crossed again.
well, you can already stake it. It's just not, you're not sure if you're ever going to get it out.
No, exactly. So that posed a problem, right? And this is what I think about when I see liquidity staking, it's called, whatever terminology you want to use. I think that was very much a way of solving a Ethereum specific problem. How can I get my tokens liquid again, right? And that worked because it was Ethereum, right? I've seen similar concepts where you can stake, swap, borrow, lend, different tokens, and then you get minted a new token. But the utility of that token, or what you should use that token for, is fairly limited, and you need to trust the counterparty who's actually minting it. And here I think, maybe becoming a bit boring again, I'm sorry. Here I think, why would I trade in the real thing for a new minted version? Well, yeah, that's higher yields, but you also need to be able to come out of your positions again. And this is where I think there may not be some issues in some markets about the depth of those markets and liquidity. And I think there's a good saying. Who said that to me? It's a good guy. He said, if you're left standing holding the token, then you are the liquidity, right? And I think that's that's
I've been there once
why.
or twice before in my crypto career. I mean, but just for reference, right? Like these tokens that you're like, I had an example, shared it just with Matt. Maybe you can pull it up, like Lido Finance, and they have like 19 billion in staked assets, right? So there's obviously, in that case, there's a lot of liquidity. So I mean, I think it's good to understand then the difference from how you perceive it versus. So just for people to understand, you would stake that the real ETH, or you basically send the real ETH or convert it to Lido ETH, and then they would stake it on your behalf, and they follow kind of the APR, or like that you would get out of the Ethereum protocol, even though it's not really delivered yet because you can pull ETH out, but it follows that on the synthetic instrument that they then create this token for you. But so you're saying like, okay, but you don't hold the underlying asset anymore, right? That is your argument for the real staking. Are there any like?
Yeah, Lido and liquid staking, I mean, requires a liquidity provider, and the liquidity provider, without being too deep into all of these different concepts that exist around liquid staking for Ethereum, ultimately is, in my opinion, a bet from the liquidity provider's point of view that they can sort of get the real ETH at some point, right? So it's just a question of saying, what is my long-term strategy versus short-term strategy, and what is my premium in terms of getting paid for lending out, essentially, or providing liquidity for people with a shorter time span. I think if you look at the spreads on Lido, or also, I think, sorry, maybe that's wrong. Maybe I'm not allowed to say that, but on Bitfinex, for instance,
you're allowed to call. Yeah.
Okay, that's fine.
We're not such snowflakes that we like ignore that there is the rest of the market exists. No, it's fine.
No, I had a great conversation yesterday with our chief of science, Emil Bay, and it was about what is the spread between, let's say, if you wanted to exchange a liquid ETH token for the real thing, and what is sort of the spread that you see on Lido, for instance. And I think we ended up at somewhere around 2%. So that's what you get, right? That's the markup for providing the liquidity. On the other end, when you want to redeem, let's say, a Lido token, a Lido ETH token, right? The real question, I think, which is interesting, is when the merge takes place and you are actually able to unlock these ETH again, right? What happens then?
I was thinking about that too when I was looking at Lido. It's like, because it's great right up until the moment that it becomes released, and like what do people then? But then it's still, can you like that's I should know this, but can you instantly unlock your staked ETH at any given time? Isn't there some lockup mechanism there as well that is on a time based schedule?
To be honest, you're catching me on the wrong foot. I can't remember what the lockup is in the ETH. I don't think it's been publicly announced yet, or if someone knows, please post it in the chat. But I don't believe that anybody knows yet what the sort of lockup period that you typically have is. I would also say that Coinbase institution actually released a report in February where this is not advice, I'm just saying what I think I read, is that the price of ETH is undervalued compared to post-merge, provided that everything goes well. And secondly, the ETH that is currently locked in staking would actually generate a yield closer to 9 to 12% than the 45% that you're seeing now. So if that holds true, then it would be very interesting to see how that affects liquid staking providers like Lido, for instance. But I'm sure they raised a lot of cash, I think. So I'm sure that.
I mean, we could park it there, but it's a kind of interesting. It is an interesting model, right, for people who want liquidity. But you're right. There is behind that. It's like, okay, the system of them actually staking, and in your case, people will be interacting with a regulated entity. I don't know if you provide public audits as well of the stake holdings in one way or another. But there's obviously a lot more checks and balances maybe than somebody could observe with Lido in terms of how they're staking. For argument's sake, somebody could create this, and instead of actually staking them, they go out lending those ETH to make a higher API on it than they're actually claiming that they do. Which wouldn't surprise me because it's crypto after all. But with Lido, I feel pretty secure on the state of how they run things, but that's not universally true. So there's a benefit as well, especially I guess for financial institutions to interact with Northstake as well.
Yeah, and I mean, for all of us in crypto, do your own research. It's just repeated over and over again, and regardless of who you are interacting with, and that goes for Northstake as well. When we talk about institutional clients, institutional investors, obviously they are very rigorous. They have a very rigorous process of do your own research, and they do counterparty assessment of Northstake. They do risk assessments. They qualify us as a service provider. We are put to the same standard as any other service provider providing services to an institutional investor, and I think that's the change that we're seeing, right? Back in the days, you could just connect your wallet, earn passive income. You could stay anonymous. You could, it's just transaction back and forth. Now we're seeing, actually a big unmet need for virtual asset service providers or digital asset service providers in this space who can be qualified by a counterparty to deliver these services. And that includes as well, what is the security setup? How well are you capitalized? What are the risks associated with staking? What is custodial staking versus non-custodial staking? And for many of these newcomers, so to speak, but still institutional investors, that's an educational journey for them, right? There's a lot of things that they recognize from, let's say, their old careers in traditional finance, but there's also just this, what is this? And the volatility and the fees. Oh my goodness, right?
and are you able to disclose anything about how successful you guys have been at like signing up different financial institutions, maybe the types? And I don't know if you can say anything about numbers. Were you guys founded again? That you were founded in?
So we were founded late last year,
Okay.
and launched our first assets, and are now expanding to multiple stakeable assets. The first asset that we launched was Concordium, which is a layer 1 blockchain out of Denmark, Switzerland, and
Aarhus.
We also Aarhus.
Just checking.
Yeah, of course.
Still happening in Aarhus. Okay.
Yeah, and then moving on from there to other stable assets and our so yeah, and I think over the course of the last 4 or 5 months, we've onboarded more than 120 clients, of which I think 30 or so, these 20-30 of those would be institutional clients, but we also have regular retail clients who want to stake, and we're just so excited about staking catching on. So yeah, we love those. We love them.
So did you say, what was it that you guys launched this product and you on?
Yeah, so that was a layer 1 blockchain, which is a proof of stake blockchain, Concordium. Which is I think the best known for their identification layer. So you need to be KYC'd in order to operate on the chain, which makes sense in some use cases for financial institutions, but also broader enterprises. broadly with enterprises. And I think this whole this trend towards regulation is something that we also at Northstake is focusing on, right? I mean, we track and follow the MiCA legislation very closely, and people tend to ask, why do you want regulation? We would expect that you would be on the opposite side of the scale, but in fact we are actually proponents of regulation, right? We almost invited in and say, please come and regulate this industry, but in a good way, because we know that that's what's going to unlock the potential that sits with the broader institutional clients and yeah. So in that sense, we similar to this is now I think we're on a tangent, but for Concordium as our first layer one, that's something that they are following and tracking as well.
But when did you launch it as a service offering? I was wondering.
In January this year.
Yep, January. And since then you have onboarded like 120 clients already.
Yes.
Of which, how many are institutional then?
25. So that is funds, family offices, crypto funds, some asset managers as well. Yeah. I
mean, that's good traction.
Yes, thank you.
You guys are busy?
Yeah, we're very busy. Very busy.
And so, this regulatory, like maybe I think Matt has a Concordium website up. I mean, so this is Concordium. This is also, I guess it's Danish, right? Like Danish founders.
Danish Swiss. Yeah.
Is it decentralized?
Yes, it's a permissionless decentralized blockchain. And they've been at it for some time now, I think, but the mainnet launched in July last year, and they listed in, I think, February this year. Yeah.
I think I've talked to them. We might need to get them on one day. Okay, good. Thanks, Matt. And so just, we often talk about regulation. It's a boring subject for some, but, like it's a little bit our bread and butter as well. So are you guys really actively participating in those discussions to have it regulated properly? A lot of that comes down for Europe, but of course, maybe because Denmark has had in some cases, some of their own views in how they implement crypto regulation, how they treat it. I think they were a lot later to the party when it comes to getting the registration for VESPs, that they waited really for the European legislation, I think, for them to just activate it. But are there like those kind of conversations that you are actively taking part of, or to shape sort of how it's interpreted within Danish law?
Yes, there's actually, interesting enough, good question. There's just founded a working group under the Danish FSA where we have representation as well through some of our collaborators and shareholders, and essentially that task force or working group is designed to define you say principles for how to regulate crypto blockchain going forward. And interestingly enough, it's some of it is fairly basic, right? In the sense that how do you define crypto assets, both from a legal, regulatory standpoint, from a tax perspective, so on and so forth, and that extends to also how do you define staking? What is staking, and how should it be regulated? How should it be taxed? And there are different definitions or regulatory frameworks that may or may not already apply, and then trying to influence what the future guidelines would look like is something that we are actually participating in locally in Denmark. Then also through our community, we provide input to some of the working groups that sit under European legislation, but that's more on just we think this X, Y, Z, and then that sort of moves forward.
So that
I think in that sense,
that they don't ban proof of work again or make unhosted wallets a problem. Small things.
Small things, exactly. Small ticket items.
Yeah, let's go there. Okay, but so maybe we talked about Concordia, but I mean, I think you guys maybe you can walk a little bit through the different protocols you're supporting, and what does it look like? Is there anything you can share in terms of returns, or that someone can expect, or is it not so much to say about that?
No, but we can talk a little bit about different assets. And I think, interesting enough, I just had a conversation about, sort of the mechanisms between, what is the price and what is the incentive to stake. So the price of the underlying assets and what the incentive to stake is. And I think there's an interesting mechanism at play here. So if you think about Polkadot or and Ethereum, for instance. So Polkadot, I think, offers 14-16% APY, so annual percentage yield, which is quite good, quite high.
It's good.
And Ethereum offers right now 4 or 5%. Both are very liquid, so you can actually come out of your position again if you needed to. So what is it that incentivizes sort of this APY, and why is it that Coinbase expect that Ethereum will rise to 9 to 12%, right? And it actually all comes down to a couple of interesting drivers, right? And that is, so when you stake, you participate in the network, right? And by virtue, you are producing blocks, you are validating blocks, you are contributing to not only the security and health of the network itself, but also the capacity and speed by which it can operate, right? In many ways. So when there's a need, so to speak, for a chain to attract new validators and new node runners, they have a mechanism to do so, right? They can offer great yields, and I think many tokenomics models are designed in a way where, as the inflow of new validators or stakers, so to speak, right, new node runners come in, then the annual performance yield tries to decrease a little bit, but we also see sort of an uptake in price action. Which sort of balances this mechanism out. So right now, I would say if you are looking to stake, there are two strategies for you, basically, right? You can look at what is the top 10, top 20 proof of stake assets that you know and love, and you can go out ahead and stake those, and you can also do that through us. That is typically, unless you were early into some of these chains, it can be fairly expensive to acquire the token mass in order to stake. If you are, let's say, an institutional investor, if you are a retail investor, you can also just delegate these chains. The other strategy is to identify some of the new and up and coming proof of stake chains, and I think we see this a lot with some of our investors who've been in this game for a while. They invest early into an exciting project. They've done their research. They know what they're doing. They're acquiring a lot of token mass. Then they stake it, and they just let it sit there, accumulating tokens for a while. Take, let's say, 25% out, liquidate it, and then reinvest that into the next chain. And then they kind of build up chains as you go, which are just accumulating stake.
Interesting.
And I met a couple of investors who've been early into, let's say, Avalanche and Terra. Because now they're really capitalizing on the fact that they made an investment and now it's accumulating. So they're not getting any dilution out of it, and they're sitting on a reasonable amount of tokens, right?
You were going to say fortune. You were going to say fortune. I knew you had it on top of you.
This is not a
reasonable amounts.
But I like the idea that the cycle times are so quick, right? So it means if you, from the point of view, identified a new chain, and then you can stake it.
And then it's all becoming Bitcoin, because they're just buying Bitcoin with their Luna right now, right?
Exactly. Then you see them coming out of the positions and going into Bitcoin or as a store value, and yeah. So no, that's why I'm sorry. That's why I am excited about staking, because I see this as a way of it's almost like we've always only be focusing on one side of the coin, which is asset appreciation. Now we actually have an opportunity to leverage sort of the yield generating mechanisms that these chains offers as well.
So I think Matt has like an overview of like the top staking assets. So can we pull it up? So earn passive income. Do you agree with this list?
Yes, well, definitely. Yeah.
Solana.
You also have you have some of the but I mean lovely assets here, right? Solana requires some very specific hardware to run. Terra is outrageously expensive if you want to run a validator node. Cardano is fairly accessible. It's fairly easy to start your own staking pool on Cardano using their wallets. Avalanche, great chain. Polkadot, Cosmos is also very interesting. So and I love the guys from Staking Rewards as well. Big shout out to those people. I mean, I think they are Poland based. Yeah.
Okay.
But great source of insights here.
And you guys
bear in mind that I think some of the stake values are self-reported, but other than that, I think they're doing a tremendous job on Staking Rewards.
Interesting. So what is it? Staking Rewards is the leading data provider. We are currently tracking 262 yield-bearing assets with an average interest rate of 12. So if you're doing less than 12, you're not doing well. Or
no, I agree, and I also think that just from a personal point of view, it's easy to start staking, right? So if you hold any of these assets, you can start to stake by just simply through delegation to pools. So I mean, don't think too much about Northstake. Also, we also have retail investors who stake with us, which is great. But the barriers of entry for just you and me, Frank, I don't know what your holdings are, but it's fairly simple, right? You just plug and play your wallet, and then you can start to stake, and
there's no minimum really to start staking, right? So it's you need to pay for the gas fees, or no, yes, no, yes, no.
It depends.
Well, ETH, you need 32 ETH, right? If you want to stake directly yourself.
Yeah, on Ethereum you need 32 ETH, but for some of the other assets, you can delegate to a pool. A lot of node runners or pools out there that you can delegate to, and they obviously take a small percentage of as fee of the rewards. But I always say that you'll be worse off not staking it. I mean, I know this is proof of work, but I'm just trying to try this back to a experience of mine. So when I bought my first Bitcoin, and I also actually bought Ethereum back then, I had a strategy which I later understood was a hodl strategy. But I said, either this crypto thing is going to take off or not. But I'm going to put it on a stick, throw it in a closet. I'm not going to take it out for the next 10 years. And let's see what happens, right? And I took it.
It's called investing, but
I know. But imagine if you could have, you could have done that. Yeah, exactly, it's hodl. But imagine if you could have done that and say, I've logged into a staking protocol now. I threw it in a closet, and then I'm going to look at it in 10 years, and it accumulated to something that is, substantial. Then that would have been even better.
I have a question. So
sure.
Obviously, you talked about it briefly with like the different hardware setups as well with the different staking providers. One, I'm kind of curious what you think of Helium as well. I don't know if they do staking, but I have this interesting model with the vicinity of the nodes. But secondly, like, what does your hardware infrastructure look like? How do you organize that? Because I guess it's a kind of crucial component of being able to be a staking company.
Yeah, great question.
Thank you.
I mean,
thank you.
some of these, you have different chains proposing different hardware solutions, right? And some that I think there's different approaches here. Either you want to make the hardware very accessible, so this is Raspberry Pi territory where you can sort of run a node on a Raspberry Pi. Ethereum is designed that way. I think Avalanche too. And then you have greater hardware requirements. So that could be, for instance, Solana. Solana is, one of the fastest chain, if not the fastest chain out there. And you need special servers in order to do that, and you need different ways of managing loads and storage on those servers. So that, I think that's sort of the two ends of each
And you guys
spectrum.
support Solana. You support Solana today.
Yes, but yes, we do, but we do that through collaborations with other staking providers, because it is just it is a special way of doing that. What I want to get at is that our primary setup is very much focused on cloud technologies. So we use multi-cloud service providers and orchestrate clusters of nodes, which are redundant in the terms of the cluster setup, but also site redundant in terms of where we deploy our nodes. And currently we are only in mainland Europe, or in Europe, because we're also in Dublin, but in Europe. But depending on the needs of, let's say, a blockchain foundation, for instance, who wants to run, use cases in the Americas or in the Far East, we can scale to that, so we can deploy nodes in those regions as well, because in the end, it's about how fast can your peer-to-peer network actually communicate, and if it's situated in Europe and you're trying to do something in Asia, that can for some chains be an issue. No, so we are you can say we are a cloud native company, right? So, and that also has to do with, if you look at the security setup for I'm not saying we use nodes, but let's just take an example. That could be AWS or Microsoft Azure. Very expensive service cloud providers. However, you get the quality, right? In terms of monitoring, security, perimeters. They run tier 1 and tier 2 class data centers. And if you are an institutional investor, you are willing to do that, right? If personally I was to stake anything and I didn't want to buy the hardware myself, I would look at, cloud providers. Like, I know Hetzner is very popular with ETH-stakers, for instance. So here you can run hardware with Hetzner.
How do you spell that?
Hentzer, I think. Wow.
Okay.
I ruined that spell, I think.
Maybe Matt can find it.
Yeah, but there are different websites tracking, what nodes are running in which data centers, and you can find very cost-effective setups that you can do just from deploying that as a virtual machine from your laptop. If you want to be at that level where you operate nodes yourself, which is also doable for some people with regards to staking. If you're the average retail investor like myself, I just wallet, connect, delegate. That's it. Then you don't have to worry about. Yeah, exactly.
One more question before we go into see if there's any questions in the Q&A. Do you foresee that you might be doing liquidity staking yourself, creating like a Lido model?
I think you should be careful what you're saying, but I think for the time being, we want to be good at staking the assets. And then we would much rather, I think, partner with the right people, partners to build those types of models. But it's very network specific, I would say. So
Okay.
it really depends on what type of asset we're talking about. But,
And today you
yeah.
support.
So I won't. Yeah, that's all good.
Yeah, no, that of course, like speculative. But so today, can you just run through which protocols you support today and which ones you are looking to support, so people kind of have a feeling?
Sure.
For...
Yeah. So obviously we started with Concordium, but we are offering Ethereum. We are hopefully soon being able to offer Avalanche as well.
Okay.
Then we have a number of other assets where we're currently building AOMs as well for our nodes, but where we're operating nodes. So I would almost encourage people to go to our website and have a look at that because it's constantly updating.
Fair enough. All right, good. Let's go to the questions. So, what is there? One here. So you earn the same amount of money consistently from staking, even though the price is volatile. So I guess you earn the same amount of the token, but not necessarily the same price because the price.
You still have price exposure. Yeah.
Yeah, exactly. Well, I could have answered that one, but there we go. And then we have what's the minimum staking amount? We answered then. And what are some small, less known projects that you are looking into?
Maybe great question. Great question. We are looking into Scale Network. I think is very interesting, and LF0. We're looking into LF0 as well. We are looking into So I think those are the two networks that we are currently looking at.
One-liners on why you find those exciting?
The teams. The teams are very exciting, and I think because they're blockchains are blockchains, right? That it's a variation over the same topic. But what is it that you want to do with this particular blockchain? And then it all comes down to the team, of course. But then we also look at whether the tokenomics model is interesting, so on and so forth. So, but those are the ones that we're fairly interested in at the moment. But let's see. They're not on our website yet, but it's something that we're looking into and we're excited about. But a great question. Yeah.
So this is one scale.
Exactly.
Is this the one? Yeah.
Yeah.
And they're like, what is the market cap of this protocol?
That's a good question. I can't remember.
Okay, right.
Yeah.
Oh, okay. It is always interesting to find what's beyond the horizon and what's upcoming. For inspiration, again, not investment advice. I'll repeat that forever, I guess, as long as we do this fellow show. But I don't think there is any more questions. Anything you'd like to? Here's the market cap. Good.
Yeah.
Small project, already 1.6 billion. Oh no, it's always a crypto.
So I think LF0 is smaller and they haven't launched the mainnet yet. No, but I mean, just a big. If I should leave you guys with anything, it's just that if you hold stakeable assets in your wallets and you're on a HODL strategy, really do consider staking it because you would be worse off in not doing it. And it doesn't matter if you stay with us. Say again?
How much of your portfolio?
Well, that depends on what your investment horizon is. But if you're just on a HODL strategy, then stake as much as you can. If you're not planning to sell it or trade it because you want to leverage opportunities in the market, but you did what I did in 2017 and just threw it in the closet, then lock it in a staking protocol before you do.
Right.
And then in 10 years, take it out, have a look, see how much you invest.
We have one more question: how to start staking with Northstake for beginners? So I guess they go to northstake.dk, right? .dk.
Yes, northstake.dk, and then depending on the asset, click the button or just ping us a note on Telegram. I'll be very responsive, or an email, and then we pride ourselves for being good at customer service. It should not only be connect your wallet and then I should figure it out myself. There are many of our clients who needs help in setting up wallets, who needs to set up different types of types of wallets, and we support that as well.
All right. Thanks so much,
Great.
Jesper. Great. That was episode 21 with Northstake, talking to Jesper about it. And we'll see you next week. And everybody have a good Wednesday.
Thank you so
Bye.
much, Frank. Bye-bye.